How are you there? This is the best time for you to buy stocks in Kenya. We all hear about shares, stock market, and so forth. This is the best time for you to buy stocks, shares, you name it, in the Nairobi Securities Exchange. Why am I saying so? This so because I just been looking at business news and there is an interesting article about how the Nairobi Securities Exchange has seen levels dip to the lowest in the last 10 years. By the way, we're talking about the aggregate market paper wealth being at about 1.613 trillion Kenya shillings, which by the way is quite low because it's actually dipped to near the lowest it was sometime 2013 around the same month. This tells you that interesting things are happening in the market. First of all, I'm going to talk about two folds. What is happening to the market as to why causing these prices to be like this in aggregate, and also what you can do as a savvy investor or even enthusiast out there for you to be able to make money through the Nairobi Security Exchange. You are all much welcomed to the Money Daily YouTube channel. My name is Afagza Sifuna. And by the way, if you're new, kindly consider subscribing to this channel. Subscribe because I'm out here each and every day bringing you awesome videos around personal finance, investing, and business. Thanks for subscribing. Having said that, it is quite fascinating how the aggregate paper wealth in the market has really dropped despite there being positive indicators in the market. For example, we've seen Safaricom, we've seen EABL, we've seen Tier 1 banks in Kenya talk about NCBA, Equity, KCB, Corp have positive dividends payout, which actually is usually one of the key signals in the market with regards to how companies out there are performing. Despite this positive dividends payout, still the aggregate paper wealth in the market has dropped. Why is that so? It's actually because we are also seeing a scenario whereby over the past few months, we have been seeing foreign investors pulling out in different companies in this country. And all these has been triggered by different actions out there. Them finding better investing markets out there, like for example, markets in the US, in Europe, and so forth. So they pull their input in different companies out there and then invest in other countries out there. And also, any signaling in the market has dire consequences. Like for example, seeing big executives in the industry resign, pull out, all this can create some form of dip in confidence. That notwithstanding, also need to understand something which happens cyclically. You know, the stock markets and also by extent the bond markets and even some cryptocurrency markets, they normally have a cycle whereby we see the markets performing pretty well, and there are those times whereby we see the prices dip a lot. One of the key triggers in this cycle is usually sometimes the change in government, whereby you see, for example, the first year, in case of change in government, the market giving you kind of dodgy signals, whereby I'm not sure exactly how the market is moving, but it's kind of sloping down in a constant motion. And then after a year or so, you're going to see now confidence by investors out there again begin surging, them starting investing in the markets within the country, more so once they prove that the government and the country is stable despite change in government. And with that, I foresee before the end of this year, given the current government regime of President William Samoei Ruto is going to have been in power for over 1 year, we're most likely going to see again continuous rebuilding of investor confidence because they're going to know they can invest safely for the next 4 years or so before any change in government. That aside, also we see out there different analysts and pundits doing critical analysis estimating how the markets are doing. And this information is also trickling down in the market to inform investing more so by those informed investors out there. Forget the noise traders out there who trade because of feelings. Those who do fundamental analysis and technical analysis, they have a sense with regards to how the market is moving. And if someone has been doing this, they have realized currently we're in a situation whereby it is kind of a dip. And in fact, even in some markets out there, there is even onset of recession. This tells you things are hard in the economy. Money is not flowing. We're seeing there being crazy business dynamics. Notwithstanding, sometime end of this year to early next year, we're going to see again the markets picking up. And most likely 2024 is going to be a good financial and investing year. That's why you need to invest in the Nairobi Securities Exchange, or even so, any stock exchange out there this year. And I'm saying so because of 3 reasons, and also these 3 key discussion points are going to assist you know how to go about making money in such kind of markets. Reason number 1, you normally buy the dip. In other words, buy when prices are low so that you are quite certain. Of course, it's not a guaranteed thing, but you have some level of certainty that the prices are going to go high again. Buy low, and then the market is going to adjust because there's something called price correction in the market. We normally have all these distortions happening, but there's something called price correction, whereby prices of different securities out there tend to move towards the intrinsic or true value over some time. There could be distortions in the market which results in the current price in the market for any security. But over time, in case there's any fundamental changes to the company, economy improving and so forth, we're going to see increase in price of stocks out there, of shares out there. Reason being, they are moving towards the intrinsic value owing to price corrections. And right now, the market is plagued by different distortions out there, whether political, economic, even panics out there. That's why we're seeing shaky prices. But over time, chances are we're going to see a positive price action. Secondly, you need to invest and hold for the long term. What do I mean? We're talking about a market whose average annual return is about 10% across different markets. Maybe some of those crazy years out there, we have maybe almost 15% increase, sometimes below 10%, but the average over the years has been about 10% in the stock market. This tells you that if you don't really hold for the long term, chances are you won't enjoy the benefit of seeing the securities you've purchased increase in price. Reason being, if you try to trade for the short term, there is transaction fees out there, there is other statutory fees out there. All these are bound to eat into your profit. And in fact, if you panic buying and also disposing of pretty soon, chances are you're going to be in the loss. So buy and then hold for the long term so that you can enjoy the benefit of these average annual returns in the market. More so in case you're utilizing portfolio concept of investing, whereby you also buy multiple stocks or shares or securities in any given market. Right? And then the third tip, which you need to use for you to be able to benefit big in this stock market and even any other financial market out there, is actually you using a technique called compounding. What do I mean? Compounding is essentially you plowing back your gains. A very basic example, dividends payouts out there. Some people cash the dividends out. Of course, this attracts some tax to some extent. Others plow this back into their investment. The more you plow back your gains into the investment, it's going to tell you that you're going to continue compounding your investment. And over time, you're going to be able to skyrocket your net worth or your wealth in measures never seen before. Assuming a simple example, you are out there compounding at an average rate of 10% per year. We're talking about in 10 years, you having almost 3 times the value of someone out there who's cashing out. That is the power of compounding. You compound by plowing back gains, plowing back profits, and over time, you're going to be able to realize crazy amount of gains in the stock market. What do you all think about this? What do you think about a dip in the paper value in the stock market in Kenya? And I'm pretty sure it's also the scenario in other stock markets out there. Also, what do you think is the best investing strategy? What does someone need to do for them to be able to make money through investing in the stock markets out there? Thanks a lot for watching. I look forward to share with you other awesome videos next time. Bye bye, and you all take care.